Hello and a warm welcome to another episode. My guest today is Seth DeHart, who is supporting founders and venture capitalists like Point9 transitioning from founder-led sales to real sales. And we are talking about the requirements and the pitfalls to make this super important phase successful. And as a spoiler, product market fit and go-to-market repeatability are desperately needed. Welcome, Seth. I'm so thrilled to have you. Welcome.
Well, I feel like we're already friends from the internet, but good to meet you in person.
Yeah, you're one of my LinkedIn buddies. And maybe for the listeners, at least when you got on my radar, it was when you published I would call it the famous article with Point9 in 2000.
Flattered already. I see you are a good salesman. You're flattering me. Thank you.
No, I think it's one of the must read pieces when it comes to what is the transition from founder-led sales and then scaling sales. Some call it then when sales actually start. But I think the topic for today is what is the process? What are the indicators to hire the first sales rep?
Yeah. Well, we could. I know we only have an hour. We could spend a few days on this. But yeah, it's fun to connect with you. I mean, there's so many folks saying so many things on LinkedIn. And it's kind of like, I think people that have more experience identify the others that you're like, that guy knows what he's talking about. And you up-level my thinking too, right? Challenge some of the assumptions that I have, which you need those sparring partners. So excited to spar with you today.
You're a good sales guy as well. So I'm flattered. So let's jump into it because we had kind of the pre-discussion and then we said, okay, let's press recording and start right away. So in your definition, what is founder-led sales and to keep it short, what is your definition of founder-led sales?
Yeah, so it's funny because we can dive into some of the comments that we've seen online around the definition. But for me, the definition of founder-led sales is up until the first sales hire, right? It's more like sole founder sales, because the founder will always lead sales, right? But for me, once you make that first sales hire, now the founder is trying to transition into more of a leadership role to get leverage from their experience and train and do a knowledge transfer to that first sales hire, be it an SDR and AE, and we can kind of go through the challenges or benefits of both. But for me, that's founder-led sales is all the way from the concept through to that first sales hire. And that first sales hire shouldn't be a sales leader. We'll get to that as well. But that's where I would define it.
Yeah. And I would totally agree with that. And I would add to, because you wished for a conversation instead of kind of just a questionnaire. So I would add to the perspectives, though, one of the key differences is that it's founder-led sales. It's not the real sales because it's heavily network driven. So a lot of sales in the early days is supported at least by a network. And the other thing is kind of that you have this kind of unfair authority. So you are as a founder, you are authority by yourself, and then you know every inch and every little detail about the product, but also about the vision. So that's why
you can promise product features that are not a repeatable sales process that a salesperson would never be able to do, and you can be kind of, like you said, omnipotent in your whatever you do, which is not repeatable by a salesperson who doesn't have that knowledge nor authority, for sure.
Is there any other thing when we look at kind of authority, so unfair authority, kind of really having this vision, but also kind of telling a lot just to get the first sales in? What are other criteria where you found over time that they are a good checklist to say, okay, what is also managing expectations? So this is founder-led sales, and this is kind of needs to change when thinking about proper sales.
Yeah. Different for each company, different for each founder, I think, right? But I think where you and I have been kind of rapping online lately is on the edge from network selling through relationships, investors, other, friends, whoever it is, right? Sometimes those are design partners, sometimes they're just pure selling, and we can kind of talk about those pros and cons in a moment. But then there's the outside of that network. And I think that is an inflection point that is just kind of easily glazed over. And as I go deeper and deeper into this phase of the business, I'm even more fascinated with that, given that it's Well, the first salesperson might have a network, but they don't have those founder connections, the investor connections. That's it's something that they will run out of quickly. It doesn't scale at the very least, right?
Yeah.
And so the idea that you need to find some repeatable motion that means pipeline generation, which is, putting your value proposition in front of your TAM and ideally your ICP to get them into the funnel, to create pipeline, to create, sales cycles and close business. Like that concept is what drives scalable business, right? And we can talk about how starting narrow is better and all of these different aspects of how to do this. But the idea that that network creates the momentum, creates revenue, creates product market fit, right? And so I'm kind of over debating product market fit. If you have one paying customer who's happy, you have product market fit. Strength of product market fit, yes, more customers that are paying and renewing and expanding on a scale that you can't even address, you can't even predict their total, their lifetime value because they're growing and they've never churned because you're such a young business. Like,
Exactly.
okay, who cares? But once you get to, I mean, not who cares, that's all wonderful. But again, debating that is something of the past. For me, it's about, is there anything that shows that you can put your value proposition in front of, a prospect and get them into with some repeatability or some regularity into a sales cycle, and then will they buy this product, right? And if you can do that, that's when that first salesperson becomes more effective. And
If I
if the
may,
sales, yeah, let's do it, man.
okay, so I think at least I just recalling in lifetime, so all the founders I met over time. So and I would say, to make it simple, 50% can start the initial sales and then have also the capabilities to structure this and work on repeatability. The other 50%.
Oh, I think that's optimistic. You must work with the most brilliant founders.
Okay, good. So
I just I don't know if it's that high to actually whether they can do it or whether they do it. All founders can do it. Whether they do it, I don't know if 50% are actually leaving their network and showing some level of repeatability before they make their first hire.
Yeah.
Like, I think that's a generous number. I wish it was so. I think that would de-risk a lot of investments and a lot of the hiring that we all do, but continue. Sorry to interrupt.
No, because this was because when I recently read some of your posts, it really, because I'm writing a go-to-market book in parallel, and that's also kind of a repeatability and then scalability. So, nice. And repeatability is kind of when I was thinking about transition from founder-led into the first sales hire, and also checking your the kind of the sales pioneer. I was wondering, I totally agree with the repeatability, but are they capable and or willing founders, and are they capable and or willing to really make this first piece into repeatability, because they are all over the place? And that's why I thought I'm waiting for an expert like you.
Thank you for calling me an expert. The flattery continues. Okay, they're all capable of it. I don't think I've met a founder that's not smarter than me, right? Like, yeah. Okay, so capable, yes. Willing, that's why I was challenging that, like, how many are actually willing? And true repeatability, I'd rather spar over the definition of repeatability than product market fit. Because, if you think about it, you put your value proposition in front of 10 prospects, or let's say 100 prospects, and 5 of them are triggered by it, compelled by it, and then you're able to book, let's say, 5 discovery meetings, right? And so whether you put it in front of them, email, phone call, LinkedIn, I don't know, anything you do. Those are the 3 main, but there's always some other niche options. But 5% conversion rate from proposition to discovery is like solid. You can scale a business on that. It's not great, but it's not bad. It's average and fine. Now, once you get into that discovery meeting, what's the conversion rate from discovery to close business? Now, if you have a sales cycle that's, let's say, 6 months, you need to make a decision before you've closed your first deal. So when I'm looking for, and I think what advisors or people that have been through this, like yourself and I many times, is we're starting to look for signal to drive conviction to then make recommendations. Signal is like, if you put it in front of 100 people and you get people that want to meet with you, it's like, that's extraordinary. That means there's something there. Okay, now we have 10 meetings and 7 of them are really interested in doing the proof of concept. Even better, a paid proof of concept. It's like, you don't get 7 people out of 10 wanting to do paid proof of concept when they know the price and they want to invest the time. And like, again, I'm using generalities, but like the reality is like, those are really strong buying signals. And I don't actually have to have closed deals to say, it appears that we have repeatability. now let's go and let's start to put a little bit of gas into this engine, which is just the process and the systems of doing it, which the founder has already done, right? In the sense of scheduled they've spent out 100 messages or enrolled 100 specs into a sequence of messaging, booked 10 meetings, had the discovery demo, whatever that mess is that they're doing kind of ad hoc, leading towards a sale starts to give me conviction or signal that I'm like, I can draw conviction from that signal. I need to put a little bit of gas into this.
Interesting how you look at it, because I maybe on a one level in more detail. So I'm a huge fan of segmentation. So when you kind of at the early beginning, you're selling to everyone, and then you see that there's some stickiness, and of course you have the founder, the magic sauce, and then in anticipation, okay, at some point I need some people to really scale. I'm thinking out loud. What is needed in my sense is that either you have the value proposition or you have some also again repeatability in use cases, that you at least have some repeatability in sending out 100 message with this use case, 100 messages in this use case. Because when I look at the old way, and I'm taking over teams where they didn't do this exercise, founders hired sales reps with, I felt that it's a little bit off, but it's kind of 10 different use cases. And smart people can handle that, but it's impossible to think, and I call it a fair setup for success, that any sales hire can handle 10 use cases in parallel.
So that'd be like 10 different products, basically, right?
Exactly.
It's hard enough to sell one, like, or two, right? Or three, but yeah, I get it. I agree with you.
And then to make it even harder and kind of then adding kind of 10 different verticals, it's kind of not getting anywhere.
Like, what are you good at, right?
Yeah. So I'm just circling back and forth, because also having kind of, I know that you have some structure in place. So when you say, okay, I'm a founder, so I see this traction, and now of course I intend to scale more repeatably or with more people. So what is then the first step in terms of, hey, not just drafting in a job ad, but what is the kind of the crucially needed work I have to do as a founder or founding team before I think about hiring the first sales?
So this is in my opinion, and many people do it lots of different ways, but I think to your point, defining ICP, defining your value proposition, feeling confident that you've narrowed down kind of the use case and you have an idea of what your business should look like, and then starting to test that value proposition against your audience and seeing if they bite, right? Is it compelling enough to get people interested? So when I come in and meet with founders, I'm looking at that to say, have we started putting the value proposition in front of prospects? Some businesses just don't work with outbound selling. And so the irony there is, if you're hiring an SDR to do outbound selling and you haven't tested it first, you just nuked that money. It's like, they're not going to be successful. And we could have figured that out with a few hours of work, right? So it's like those steps into starting to test it. And so again, the how confident are we? And how fast do we have to go? Right. So I think one of the things that I look at is I'm working with more bootstrap businesses, which are interesting because they have a lot less capital than the VC businesses, but they're more interested in going through these exercises with me. And so what's fascinating is, like, when I've been a first sales hire at several companies, and some have failed, and fortunately one was wildly successful. And so that first one that was wildly successful, I look back on it. I was actually having a conversation with one of my sales reps who was there yesterday about this, of what I would have advised the founders to do had I known now, right? Or what I would have advised me, but the founders would have been giving me the guidance at that point. What we did was we raised from benchmark, right? So tier 1 VC raised 10, 13 million, something like that. I didn't know was I did things like needed absolute conviction. I tend to be pretty conservative, right? So I don't like being reckless, and I don't want to hire people that I have to fire, and I don't like making mistakes. So what I would do is, like, first I made myself a good salesperson. And I don't think I'm a particularly talented salesperson in like the ability to sell, more of a system builder, which I think sets me up well to be a VP of sales and also be an advisor. Is I'm not just, pitching. I'm better at, because I've managed great salespeople. They're much better than me. So I know what greatness looks like. And so, right. So I built myself into a systematic seller. And then when I was able to hire the next person, my first SDR, I put him in my prospecting portion. He booked my meetings, right? When I started, I was the full cycle, like, which we can talk about later what that profile is. And then I started slotting people into the systems that I was already running on myself. It made it pretty easy to be able to scale the organization. Now that worked really, really well. What I did wrong was I would hire someone, ramp them up, make sure that they could get to a consistent amount of quota over a significant amount, like several months of quota achievement before I hired the next person.
Yeah.
Having worked with 80 plus, maybe 100 startups and founders now, and investing myself and experiencing all of this, I'm now seeing love blitz scaling, right? Because I think that's reckless, but I do like kind of the bleeding edge of risk taking for growth. And what I mean by that is I would literally take 6 months between hires, which fortunately for me allowed me to grow into sales leadership, right? And grow a really big team at a pace where the company didn't outgrow me. So it was very conservative, and it was kind of unknowingly selfish because aligned with my own personal growth and all that stuff. Hiring 10 people at once would have been overwhelming. I was still kind of a kid. And so what I did wrong was I should have been hiring much faster, right? I should have seen that this is working. It can go faster. We have lots of capital and limited time. Right. And I think that's what a lot of people who've just raised capital don't realize is it's like you don't have time anymore. You now have a lot of cash. You need to grow really fast, or you don't grow fast enough, and the valuation and your ability to raise more capital, all that just kind of, the options become less optimal. And the quality of the valuation, and even more important than the valuation, is the quality of your investors just slowly drops, right? Because it's the cash, turn it into revenue, but you don't have time because you stretch out the time. And then you layer that revenue in, your revenue trajectory and growth trajectory is just not exciting enough. And so that's what I did as one of my first early mistakes. And what I've learned from that is you kind of need to be on the edge of, I should have been hiring faster. I should have been pushing the envelope of risk a little bit because we had the capital and it would have changed the growth trajectory. And I believe left a lot of revenue and valuation on the table. I didn't know. I was ignorant, and, I wasn't told to do that. Worked out for me as a leader because I was able to grow at the right pace. But that's what I'm thinking about with these companies is you've raised a lot of capital, have really high revenue expectations. So you need to start kind of pushing the envelope on risk. And what that does, it gets more dangerous because then you're hiring more people without total conviction that they're going to get to their goals. And it can get really messy, really fast without someone to guide them. But if you do it the opposite way and you hire one person, get them to get to their quota after closing the business through this full sales cycles, 6-9 months later, hire your next person. That's just not a venture scale business. I'm doing the same sequence of events, whether you're bootstrapped or whether you've raised $50 million in your Series A, right? Or I've seen some, recently in the past few years, raised 20 million in a seed round without having made the first sales hire. The key is it's the same sequencing of events. It's just how much risk can you take and how much pressure is on the business to figure it out. That's why I think that blitzscaling concept is it's sexy, and in the sense it's you're trying to build a rocket ship that's going to get to the moon. Most are going to blow up. You have no choice. But if you're building a glider plane that's low risk, great, but that's not a venture-backed business. And I think that's an interesting thing that people miss out on, that it's no, you have to build a rocket ship. It might be the same order of events of putting the rocket ship together, and you can de-risk it as much as possible, but you're going to have to take a little risk on signal, conviction, growth.
I really like the perspective, because at the very end, I'm not a big fan of blitz risking scaling either, but I think Pareto was nearly always right. So with 20, 80, 20, you definitely have really good tools to de-risk that scaling. And to sum it up, so I think we have other debates potentially coming up, but where we both agree is kind of, so founder-led sales, you build up some traction, you get more and more into the market. The next step, whether you do it as a kind of disciplined founder or with some structured, whether you call it a sales engineer or whatever. So what needs to be structured a little bit more is have a clear understanding of your ICP, have a clear understanding of your value proposition, and or I put it in more use cases because it's for me more digestible. But either way, it's kind of how also to link it with product and capabilities and roadmap, and also check with churn and potential NRR. So, but either way, I think value proposition / use cases. So this personas, roles and buying centers. So some first attempt of structure. Either way,
and it's going to change, but having a first attempt is
exactly kind of it's the first kind of documented hypothesis in terms of this ICP. Let's reach out to 100, 200, 300 and see what is working in reply rates, demo offering, closing rate, etc. But you need to start somewhere. So I would say this is the first phase. Then adding the first sales hire. I'm a big fan if we are not talking about, depending on the cash flow of a bootstrap company, I'm always a big fan of hiring two.
Agree.
Oh, that was an easy sell.
But no. I mean, there's what you're a fan of and what's actually like going to happen, right? Can you really line up two excellent people at the same time? Like, it's really hard, right? Because if we define this role, we can get into that. It's like they're not a unicorn, but they're a top 5, maybe top 1% of salespeople can actually do this job well. So it's really hard to find that. And then you're making trade-offs with skill levels in different categories of whether you're an industry expert or whatever that experience is that's going to help kind of de-risk things. I think it's challenging. I would say for anybody listening, one of the things I emphasize the most, and I continue to, it's like as an advisor, I never want to say I told you so, but it's like it becomes this like theme, is it takes a long time to find this person. So when I usually start working with a founder, one of the first things I say is like, let's develop that profile and let's start looking now. You're going to get to the point that you're going to get exasperated and you're going to run out of time. And I have one founder that I love. I work with him closely, started working in September. One of the smartest guys I've met and worked with. Guy's brilliant. September, I said, we need to start looking now because we're not going to be able to get to our goals next year if we don't have this person in place. Took our time on that. And we're now into February 8th. And I think I think we found someone that I think is starting on Monday. And I think there's some risk associated there because they don't have all the experience we wanted, because we're now looking at the math and saying, this math isn't going to add up. We don't have the horsepower in this engine. We don't have the capacity to get to these goals. It's because we should have started in September, and we could have had that person starting in December and be ramped up and achieving quota potentially in February. And so that's one thing that's like finding this person, finding two of these people, right, takes 3 to 6 months.
Yeah.
So
easy.
It's already, we're already behind. When I meet a founder and they're like already showing some repeatability outside of the network, right? Starting to do some of that go-to-market motion that shows that signal that we might have conviction we should hire. It's like too late.
Absolutely. Yep.
Right. Because you have these looming growth goals that you need to achieve to satisfy not only your investors, but future investors, the market, right? Your investors only are putting out those goals to say, this is the trajectory we need to do to be getting our rocket ship to get through the Earth's orbit at a trajectory so that it doesn't disintegrate, right? Or fall back to Earth, right? That's like a really specific angle that it needs to go through the atmosphere to get to outer space. And so that's what they're setting that for. But it ends up being a capacity exercise in a spreadsheet that shows like, you're not going to have your reps doing 15K of MRR on $12,000, ACV deals. It's like the math isn't going to work out. You need, 5 reps to get there, and we haven't hired the first one yet. So things like that become critical to map out in the future. And it's always just like, if listeners say nothing else, it's like that takes 6 months, especially in Germany.
Yeah, I'm afraid that's true. So the only alternative I see, and of course it depends on whether we're selling to enterprise or whether they get any kind of support with advisors or kind of angels, investors.
And let me just say, like, when I speak, I mostly work with mid-market companies. I also work with many enterprise and many kind of SMB, but I speak in generalities a lot, and it's targeted to mid-market. And when I'm saying these things, it's skewed in either direction, right? To enterprise or SMB, but it's like more nuanced, obviously, than I'm.
Yeah. But then maybe we will find one topic for debate is because So this is kind of, let's assume we have done some structuring from founder led sales to the first sales house.
You speed up my heart. That's good.
So, and then because I've done it with some of my clients, we agreed with the founder who stayed definitely in the sales organization, leading the organization, that we go for a little bit more junior, so structured people, very ambitious, fast learner, curious to learn, and say, okay, this is even kind of senior SDR, because there are some changes in the setup. We come to full cycle in a second probably. So there we could definitely speed up the hiring process to 3 months, 2 people with some guidance in parallel. And so just for the listeners, there are some options, there are limited options, but that could be scenario potentially you're offering the same in kind of supporting enabling the founder or the sales founder, adding 1-2 people into the team, and then bringing structure and speed into the game.
I can't argue with that. I think there's something that you said really quickly that I'll pull out of this. Some guidance. You have not managed salespeople before. Fucking nightmare. Like, I know it. And if you have done it before.
Yeah.
Right. I think we all should have just majored in psychotherapy or become therapists before we got into sales. And so, someone who hasn't managed salespeople always makes mistakes in hiring. In some of my articles, it's like, you're going to hire your first sales manager or first sales rep. They're like, yeah, it's because you made a bad hire, because you've never hired salespeople. You've never managed salespeople. You don't know how to set them up for success. You don't know how to assess them. Salespeople are the best of any function at selling themselves, especially in America, right? It's like, so like there's this interesting phenomenon that you said is like, yes, you can hire more junior if you have someone there that can vet those people, can understand how to set up reasonable KPIs and expectations to set them up for success, can help put them in a framework that will set them up for success. I just think it's like really dangerous to say a founder who has not hired salespeople before goes and hires salespeople. It's like, okay, you're like, I don't need an advisor. Dumb people do sales. And then you hire your first salesperson, fire them, and you're like, wait, I might need an advisor at this point, right? And you've already burned time.
Yeah.
What's that take? 3 to 6 months? How much cash is that? So I always think it's funny when companies are burning 10, 20, 30, 40, 50K a month. They're like, no, I don't want to hire an advisor. That's too expensive. It's like, what if you could shave 4 months off the time that's going to take you to figure out how to get to revenue? Anyway.
Yeah, no, I digress. Because it's simple math. Because
having you manage their SDRs alongside them and set them up for success and hire them and all that stuff, that can be totally doable. The risk there is that you start to create a bunch of pipeline. The risk is that it is successful, and then you overload the founder, who also needs to be leading the company, doing a bunch of other stuff, with too much pipeline. And now all of a sudden you're prematurely promoting an SDR into a sales role. And I've seen this happen before. It's like a great scenario, but then all of a sudden you have an SDR closing deals on a pipeline where you could have had a salesperson doing it. So like, yes, but right. I mean, there's these trade-offs, because you don't go into any of this not optimistic that it's going to be successful.
Very structurally speaking, so I would call it a luxury problem then, because the first
I've seen it though. It's a problem.
The first conversion is from kind of whatever that is founder-led sales, then put it a little into structure, get 2 people ideally on board, or more than the founder.
At the very least, creating pipeline. That's where you and I are very aligned. Yes. Because without creating pipeline, you can hire an account executive, give them a quota, put that number in a spreadsheet, and wonder why it's not being filled in. It's like, without pipeline, I mean, this whole conversation is called, it should just be like pipeline creation. That's, if you're not focusing on that, the rest of this thing was never going to happen. Anyway.
No, but pipeline generation is a good one, because a little sidestep, but I think it's again an expert like you, because
all right, I'll take it.
So we won't open the Pandora's box of all the discovery frameworks, but I think to also in your terms, how do you define pipeline, or what qualifies for pipeline in your kind of criteria set? Talking about mid-market, but also I think it's
I think the reason I pause is because I think it's think about it kind of in layers. Like, the general sense of pipeline is really anything from interest from a market, prospects, ICP, addressable market, through to close, right? That one big funnel is pipeline.
Yep.
Now, true pipeline, right? And then the next level of pipeline is they have scheduled a discovery call, and that discovery call is going to happen, right? Or has happened, right? It is happening, right? That's a major event that they're willing to meet with you, and then it has occurred.
Yep.
And then the next piece is their intent? Like, are they genuinely interested in buying the product, right? And this is like gets into the kind of art of selling because there's a little bit there, but you can qualify it, right? Do you
Yep.
have budget? No. Yes. No. Yes. No. I don't know, right? Like you can put these things in different categories, but post discovery into buying intent, let's call it, that phase from discovery to close, assuming there's intent, is real pipeline, right? That's what I'm really looking at. So I think those are like those different, it's that traditional funnel with the different kind of layers in the funnel. There's the whole pipeline, and then there's the kind of pipeline strength or likelihood to close, right? And it gets down there into like the intent area.
Yeah.
The method of creating all of it pre-close is pipeline, in my opinion.
Yeah. It's pretty similar. So when you look at the kind of awareness, consideration, selection in that phase, proper pipeline for me is to this transaction. This is interesting to, that I consider this as a relevant option to solve my problem. It's fitting to the use case. So I'm a little bit more specific in terms of, does it fit to my core ICP and segmentation? And depending on the
right, like behind all of this is whether they're qualified for sure. They shouldn't be in the pipeline unless they're qualified. And obviously, there's like external qualification, which they meet the qualification criteria on paper from the outside, and then there's internal when you actually talk to them, like, do you have budget? I know that's an antiquated kind of example, but in some cases it's not. Some companies still.
And another detail layer is compelling event and timeline. So I think, are we talking about, we have time to call it proper pipeline if they have 6 months?
Months. I momentum towards a decision.
Yep.
Yeah.
So
momentum
this is kind of
key.
And also make it digestible, because I think we could spend easily an hour just on discovery frameworks and what kind of piece of information we are gathering in the first meeting, second meeting, and so forth. But I'm a big fan of making digestible, because as soon as you're adding up more people, it gets messy either way. Yeah, even with a proper structure.
Yeah. I mean, you're kind of baiting me. I want to go into that, but like we'll save it for the next time.
All right. We also, in just coming back, so first step accomplished. We were dancing a little bit about the role and the potential roles, because we touched already, or at least we talked about SDRs versus full cycle seller, account executive. Also, in terms of your experience, what are, again, some guiding principles to say, okay, what makes sense, or what kind of founder, what kind of situation is fitting for first hire? Is it more an SDR profile versus potentially full cycle, or is it set as a full cycle seller?
Yeah, so we're talking about like sales IQ and wisdom. What I mean by that is, if you have a founder who is not particularly good at selling the product, right? And that's okay. Like, they got this far, we're having this conversation. Like, if they get this far, they're probably they raised capital, they've sold, despite their inabilities. It's almost funny. Like, the worst, I always joke with founders, like, the worse they are, the better it is for the business, in the sense of, right? Then you can bring in some real talented salespeople and it's really going to go. But sales wisdom and sales IQ, right? So if you hire an SDR who's right out of university, who hasn't had a job before, you're gonna have to teach them a lot. Hire a seasoned SDR, like you said, they already understand the process, and maybe they've done it at one company, at least maybe two companies, so they understand there's like different ways of doing things. You hire an account executive who's already been an SDR at one or two companies and sold at one or two companies. They've gained wisdom across this so that they can actually help increase the conversion rates and increase kind of the robustness of the selling process alongside the founder. So if you're, use your example, let's say you hire two senior SDRs to help create pipeline, they're not going to really help a founder learn to do discovery and manage a pipeline. Never managed a pipeline before. The last thing a founder wants them to do is to be learning how to manage a pipeline on their pipeline, which is the lifeblood of the future of this company.
Yeah.
So, but if you bring in a more seasoned account executive who can do pipeline creation and pipeline management, there's less things they need to learn. They can bring some wisdom and IQ to the table that the organization lacks at the time, right? And so to be able to help the founder become more robust in their selling and manage some of the deals, right? I love an account executive who has experience and starts to administrate some of the deals, starts to handle some of the communication. The founder's still there to guide them, but they're an accelerant to the founder's ability because now they can handle a lot more, right? And the founder becomes almost like a sales engineer, or they're like, hey, this is what you need to do, come in for this, right?
Like that perspective. So what is kind of the on knowledge, so experience, what they're bringing into along the sales funnel or the buyer's journey, how you call it. I really like that perspective. So picking
like
up
if
on
I'm
that.
hiring, so if you have a sales founder, like let's say you and I are starting a company, or I'm starting a company, you're starting a company. We don't really need to hire a full cycle AE to start, right? We could hire the 1 or 2 SDRs and I can manage the sales cycle.
Yeah.
I'll handle all the meetings. Now, you don't have to be someone that's a sales advisor to do it. If you've been a salesperson before, you can, or manage sales, like you're good to do that, right? Or if you haven't, you have a guide there. But what I worry about is if you have 2 SDRs booking a bunch of meetings for you, the advisor is there to help you, but you're not really getting a lot of leverage because then you still need to make that first sales hire to start to handle those deals and make that knowledge transition. And so I think the SDR can be a shortcut. I still think you need to hire that other AE soon. And if you're doing another AE plus 2 SDRs, you've increased your cost.
Yeah.
Right. And the one thing I would say about the full cycle AE, the key is that they've already been closing deals and been successful as an account executive. Then they understand the whole process. An SDR hasn't closed deals, so they don't understand the whole process. Doesn't mean can't, they're going to, but they haven't had reps. They haven't managed many deals in a sales cycle to understand what to do. So full cycle AE can come in and start to help to build the playbook to do the outbound prospecting. An SDR isn't going to really be able to build that from scratch without an advisor. And even then, an AE should be able to do it, and they're in the weeds and they're seeing what's going on. Once they start to show predictability and being able to create pipeline, they're also riding along with the founder, learning how to sell. Organic process, 1 or 2 of those, sets up the next hire SDRs to be slotted in. They can then have that repeatable playbook to create pipeline that the AEs are then managing. Let's say you have 2 AEs and 4 SDRs managed by an advisor and a founder. That's the sexiest ingredients to hire a world-class VP of sales.
Yeah,
without
absolutely.
that, you get a really good VP of sales because they're looking for those ingredients and conviction that they can scale. And so the lower the ingredients, the higher the risk, the lower the quality of the VP you're going to be able to get, or the more you have to give up to get the right ones. The best ones won't join when there's like 1 AE, 1 SDR, and like there.
Very entrepreneurial setup.
Those are kind of those trade-offs that I see. Yeah.
No, I totally agree with you. And I'm just thinking out loud, also respecting the time at roughly 10 minutes to go.
We'll have to do this again, man.
Yeah, it needs to be continued, but it's so much fun already. So just have that thought about kind of, because you mentioned documentation and building up the process. And we both know good sellers like AEs, it doesn't respond automatically with building up processes, documentation, etc. So any best practice, any unfair knowledge, how to assess this kind of quality documentation, building a process to really develop a pragmatic sales playbook or revenue playbook, how you call it, while assessing the potential first hire.
Yeah, like 2 pieces, right? I think there's you tagged me in a post. I think you baited me into some argument with somebody.
Guilty.
Yeah, thanks. Spend my time in the comments.
Good for your reach, though.
Yeah, good. Yeah, good use of my time and mental health. Experience versus non. I think the reason that's a topic is because what we're talking about, we're making it sound very simple. It's very challenging and very chaotic. So dealing with unexpected, I don't even want to say chaos, like unknown future is very challenging for humans. And salespeople have typically, while we all live in an unknown future, if there's a playbook in place that shows a path to success, then it's usually just about sales skills and hard work. Organizations that we're talking about, there's no clear path to success. It's a lot of experimentation. So people that have worked in a startup environment often are more comfortable with creating something out of nothing to find success. There isn't a path to success, right? You have to create the frameworks, the systems to be able to get there. You have to create something from nothing. And I think that's what draws a lot of people to startups. People that have worked at large organizations are like insulated from a lot of that risk in the sense of, describe it as like or soccer, I guess either American or European. You're on a team and you can blend in. You can make mistakes. You cannot be the excellent. And if your team is good, you'll win the championship. The startups are like singles tennis. You're out there, everybody's watching. You're either a star or you're going to suck. Like there's no hiding behind things. Your numbers are very transparent. And I think in a startup, you need to be comfortable knowing that you're fully exposed. There's no clear path. This is a lot of like, you have to create stuff out of nothing. And that certainty, some people thrive in it and some people it kills. And so people that have worked at large companies and never had that startup experience, doesn't mean they can't do it. I mean, there's no proof that they can demonstrate it. So when I'm interviewing those type of people, I'm looking for things outside of big company environment or even within it that shows uncertainty. Where people that have gone through multiple startups in the early phases, it's just like, it's natural for them. So I think that's the first step is like work in uncertainty. Can they build something from nothing? And I actually don't mind if this might be a kind of a controversial take, but like I want them to be able to create playbooks, but I don't need them to. Right. So if I'm an advisor there, like I can do all that stuff. I can distill out what they're doing and I can tell them what to do. That's a repeatable thing that is the playbook. So ideally, they need to help me. They need to be self-aware. They need to know when they're doing a good job, what they're doing, what they need help with. Like that's a really key, important piece. And they need to be very honest because they need to be able to share with me as the advisor what's going on. But they build the playbooks themselves.
Yep.
So, and to answer your question, the playbook is an iterative document that's in a draft format that's going to evolve over time. It's not some Bible that's going to stand the test of time. It's a right. It's a iterative document that can literally just be one page on how we do outbound prospecting, one page on what our sales stages are and what the milestones are and the qualification criteria. It doesn't need to be overdone. And I think that's the thing is like, I don't need someone to build that whole thing. I can do that with the founder, with the salesperson. Right? But it's the pursuit of the repeatability, the pursuit of saying, okay, we're going to stick with this. We're going to run an experiment. We're going to test this hypothesis. We're going to see the results, right? So that experimentation mindset is really important because like a hypothesis that you test, no failure. It may not result in the way that what you want, but as long as you have data and you stuck to the test, right, then you have results that you can then learn from and iterate on. So I think a lot of big company people get frustrated, or it's not even fair to say, like some people get frustrated when the results are not what they want. So used to being able to get the predictable results that get them to their pipeline, to get them to their quota, that they start to lose their mind. They're like, why isn't this working? It's like, we never knew that it would work, right? Exactly. We're figuring this out. We're running experiments. So having the experimental mindset that's like, we're going to test hypothesis is going to be iterative in those playbooks, I think is also like a really important piece that goes with how do you build the playbooks? How do you actually set this up for some level of repeatability?
Yeah, and it totally resonates with me. I think we have to differentiate between with an advisor or with anyone who has already some experience and or not. But I think you mentioned it. Some level of structure is nice because to get to up to speed, but it's no mind that we are still talking about early stage, and there's so much chaos of you don't need a PhD guy person to do it. So define some proper hypothesis how you would formulate it with an OKR, get this as a written document and shared alignment as a piece, and then collecting real-time data and then iterate. So it's the level of structureness is limited.
And I think it's an interesting thing. Like before we started recording, we were talking about the quality of advisors. And I think it's interesting because like anybody can be an advisor and it's wonderful, but there's so many people that can help out, right? It's fortunate in that first company that I was with that scaled was 100% outbound. We built that machine. And when I joined Framer as my first kind of full VP sales title, to scale that, outbound was not a thing. Like it was full inbound. Now we could do a little bit of top-down prospecting once we had the inbound leads, but you're not going to we were selling to engineers and designers and pitch a design tool. Like that's just not how they use Sketch or Figma or any of these tools. They found their own tools and played with them. And so those two different, like, oh, this can work really, really well in two different ways, me like set me up for when I started advising. I was like, done many ways. Unfortunately, I'd worked by, I don't know, 8 or 10 companies by then. So I was like seeing many different ways. And so talk about, you and I were talking about the kind of quality of advisors. It's like the more that you've seen really increases your speed of making decisions. Like when I started, I used to spend a day a week at the office with companies in Europe at the time. So I just flew or took a train every day and spent a different day in a different office. And I needed a full day. And I've seen so many companies, I'm like, I know what we need to do now. And that's like, and you can probably do the same thing. And other advisors, there's others that are even better than me. They've just seen more.
Exactly.
So I think when we were talking earlier about the quality of advisors, it's like people that we were talking about, they mean well. They just think they know a lot, but they don't because they haven't seen a lot. They know a lot at what they know, right? They have it's almost like recency bias. It's like, oh, well, this is how you do it. And I've seen other advisors come into companies that I've been working in from other investors, and they're like, we should do this. And I'm like, no, because that's what you did at your last company. That actually doesn't work here. And so I think it's kind of that same thing as you assess advisors or a head of sales or whatever. It's like, had a lot of reps and a lot of sample sizes. And so when you assess these first sales hires, there's whoever, it's like, do they have a lot of into the fact that this is going to be different than anything else they've ever seen? But do they have a large sample size that they can say, based on everything I've seen, this is the thing? And so when you're assessing advisors, it's like, well, have they done exactly what you need? Great. Have they seen many things that are similar to what you need? Great. Like those are really valuable things. But I think there's a lot of folks that just haven't seen a lot, and that lack of sample size and lack of kind of seeing many different ways, kind of decisions slower. You make mistakes. Like you don't have as many kind of insights, and you can't draw conviction from signal as fast.
It has been wonderful to you. I gave you a promise that we'll finish on time. I messed up my time management because normally I have a personal question at the very end, but you meant it seriously that you have to leave on time, and I respect that. So it was truly a wonderful session. I think it needs to be continued. Either way, I'm pretty optimistic that there was so much wisdom and knowledge there. So it was a true pleasure to have you, Seth, and I would say we'll keep in touch and see you on LinkedIn or somewhere else really soon. Thank you.
See you, man.
Bye-bye.